Welcome to our incredible channel, where we bring together the captivating finance stories and insightful book summaries. We highly believe in the law of attraction, which says that we can attract into our lives whatever we focus on and hear on day-to-day basis. It's like a powerful magnet that responds to our thoughts and emotions, shaping our reality. In our channel, we explore fascinating stories of people who have achieved financial success against all odds, showing you how their thoughts and actions played a key role. Please like and subscribe to get connected with the like-minded community. Today, we are going to talk about the chapter-wise book summary of the book that made Warren Buffett the billionaire tycoon that he is today. Introduction. The Intelligent Investor, written by Benjamin Graham, is considered a timeless classic in the field of investing. First published in 1949, this book offers invaluable insights into the principles of value investing and provides practical guidance for investors seeking long-term financial success. Graham, often referred to as the father of value investing, lays out a disciplined and rational approach to investing that emphasizes thorough analysis, risk management, and the importance of a margin of safety. Chapter 1. Investment versus speculation. Graham begins by distinguishing between true investing and mere speculation. He defines investment as an activity that involves thorough analysis, calculation of intrinsic value, and consideration of margin of safety, while speculation is characterized by a focus on price fluctuations and market trends. By highlighting the fundamental differences between the two, Graham emphasizes the need for investors to adopt a disciplined approach rather than succumbing to short-term market sentiment. Chapter 2. The Investor and Inflation. In this chapter, Graham addresses the impact of inflation on investments. He explains how inflation erodes the purchasing power of money and emphasizes the importance of considering inflation when assessing investment opportunities. Graham advises investors to select investments that offer protection against inflation and to consider alternative assets such as stocks and real estate. Chapter 3. A Century of Stock Market History. Graham explores the historical performance of the stock market over the past century, analyzing its ups and downs and the lessons investors can learn from it. He highlights the importance of long-term thinking, emphasizing that short-term market fluctuations should not drive investment decisions. Graham also cautions against excessive speculation and encourages investors to focus on the underlying value of securities. Chapter 4. General Portfolio Policy, the Defensive Investor. This chapter delves into the concept of the defensive investor, someone who seeks to preserve capital and minimize risk. Graham provides guidelines for constructing a defensive investment portfolio, including diversification, the use of low-cost index funds, and a focus on high-quality, dividend-paying stocks. He stresses the importance of patience and discipline in building a defensive portfolio. Chapter 5. The Defensive Investor and Common Stocks. Here, Graham provides further insights into the defensive investor's approach to common stocks. He outlines various strategies for stock selection, including focusing on large, well-established companies with a consistent track record and a history of dividends. Graham also introduces the concept of Mr. Market, to emphasize the importance of not getting swayed by short-term market fluctuations. Chapter 6. Portfolio Policy for the Enterprising Investor, the Positive Side. In this chapter, Graham discusses portfolio policy for the enterprising investor, who is willing to put in more effort and take calculated risks to achieve higher returns. He explores different strategies for stock selection, including the use of quantitative analysis and the search for undervalued opportunities. Graham also warns against excessive speculation and encourages investors to conduct thorough research. Chapter 7. The Enterprising Investor and Market Fluctuations. Graham provides guidance on how the enterprising investor can navigate market fluctuations effectively. He advises against trying to time the market and instead recommends focusing on long-term value and taking advantage of temporary mispricings. Graham emphasizes the importance of maintaining emotional discipline and avoiding herd mentality. Chapter 8. Investment versus Speculation. Results to be expected by the intelligent investor. In this chapter, Graham emphasizes the importance of having realistic expectations as an investor. He argues that investing is a long-term endeavor and that investors should focus on achieving satisfactory results over time, rather than trying to beat the market consistently. Graham provides insights into various investment strategies and encourages investors to adopt a disciplined and rational approach. Chapter 9. The Investor and His Advisors. Graham discusses the role of investment advisors and highlights the potential conflicts of interest that can arise in the relationship between investors and their advisors. He stresses the importance of understanding the fees and compensation structures involved, as well as the need for investors to educate themselves and make informed decisions. Graham advises investors to seek advisors who prioritize their clients' interests and provide objective advice. Chapter 10. Security Analysis, the Basis for Intelligent Investing. In this chapter, Graham introduces the concept of security analysis as a fundamental tool for intelligent investing. He discusses the importance of thoroughly analyzing a company's financial statements, its competitive position, and the overall economic environment. Graham provides insights into various quantitative and qualitative techniques that can be employed in security analysis, emphasizing the need for a comprehensive and disciplined approach. Chapter 11. The Defensive Investor and Common Stocks. Graham further explores the defensive investor's approach to common stocks, focusing on additional strategies for stock selection. He introduces the concept of margin of safety as a key principle in investing, highlighting the importance of purchasing stocks at prices significantly below their intrinsic value. Graham provides practical guidelines for determining a suitable margin of safety and advises investors to exercise caution when evaluating speculative stocks. Chapter 12. A comparison of 4 listed companies. In this chapter, Graham conducts a detailed analysis and comparison of 4 different listed companies. He demonstrates how to assess their financial health, profitability, and valuation using a variety of financial ratios and metrics. By examining these case studies, Graham illustrates the practical application of security analysis and provides insights into the factors that should be considered when evaluating potential investments. Chapter 13. Stock Selection for the Enterprising Investor. Graham focuses on stock selection for the enterprising investor, emphasizing the importance of conducting thorough research and analysis. He introduces the concept of bargain issues, stocks that are trading at prices significantly below their intrinsic value. Graham discusses various factors that can contribute to a stock's attractiveness, including its earnings potential, management quality, and industry position. Chapter 14. The Theory of Common Stock Investment, the Dividend Factor. In this chapter, Graham explores the theory of common stock investment, with a particular focus on the dividend factor. He highlights the benefits of investing in dividend-paying stocks and provides guidelines for identifying companies with a consistent dividend record and the potential for future dividend growth. Graham also explains the concept of dividend yield and its relevance in evaluating investment opportunities. Chapter 15. The Theory of Common Stock Investment, the Earnings Factor. Graham continues to discuss the theory of common stock investment, this time focusing on the earnings factor. He explains the significance of a company's earnings and how they contribute to its long-term value. Graham highlights the importance of analyzing earnings growth, stability, and sustainability, as well as the relationship between earnings and stock prices. He provides practical examples and insights to aid investors in their analysis. Chapter 16. The Investor and Market Fluctuations. Graham addresses the investor's perspective on market fluctuations and the opportunities they present. He emphasizes that investors should view market downturns as potential buying opportunities rather than reasons to panic. Graham encourages investors to maintain a long-term perspective, remain disciplined, and take advantage of attractive prices during market downturns. Chapter 17. Investment Funds. In this chapter, Graham discusses the advantages and disadvantages of investment funds, such as mutual funds and investment trusts. He provides insights into the factors that investors should consider when evaluating these funds, including fees, historical performance, and the fund manager's expertise. Graham highlights the need for investors to conduct thorough research and exercise caution when selecting investment funds. Chapter 18. The Investor and His Community, continued. Graham concludes the book by emphasizing the ethical responsibilities of investors and the importance of contributing to their communities. He encourages investors to consider the broader impact of their investment decisions and to support companies that align with their values. Graham discusses the potential for socially responsible investing and highlights the positive role investors can play in promoting ethical business practices and social progress. Conclusion. The Intelligent Investor by Benjamin Graham offers a comprehensive and timeless guide to intelligent investing. Through its pages, Graham emphasizes the importance of discipline, thorough analysis, and a long-term perspective. He cautions against speculation and encourages investors to focus on the intrinsic value of securities, adopt a margin of safety, and remain rational amidst market fluctuations. The book equips both defensive and enterprising investors with practical strategies and principles to navigate the complex world of investing successfully. While Graham's original work was published over 7 decades ago, its principles and insights remain highly relevant today. As financial markets continue to evolve, the fundamental principles espoused by Graham serve as a timeless framework for making informed investment decisions. Whether you're a novice investor or a seasoned market participant, The Intelligent Investor offers a wealth of wisdom to guide you on your journey to becoming a prudent and successful investor. If you enjoyed this video and found it helpful, be sure to subscribe to our channel for more engaging content on financial education, book summaries, and investment strategies. Please go through the playlist in the channel to find the similar videos. We're committed to providing you with valuable insights, practical tips, and the tools you need to navigate the world of finance with confidence. Don't forget to hit the like button and share this video with others who may benefit from it. Feel free to leave a comment below with any questions, book recommendations, or topics you'd like us to cover in future videos. We value your feedback and look forward to continuing this journey together. Remember, financial education is a lifelong pursuit, and every step you take toward improving your financial literacy brings you closer to your goals. Stay curious, stay informed, and stay on the path to financial success. Until next time, happy investing and keep expanding your financial knowledge.